Welcome to another S&P 500 Trade Watch analysis. Today is July 17, 2022. In this video, we'll analyze the price action on the ETF for the S&P 500, the SPY, the ETF for the Nasdaq 100, the QQQ, and the ETF for the Russell 2000 IWM. And we'll also analyze Apple and Tesla. From these analyses, we'll identify price level to monitor and possible price movement scenario for the coming week. As the earnings season starts in its earnest starting next week, at the end of this video, I will have a bonus segment on looking at some of the widely watched stocks that are reporting earnings this coming week. Stay tuned. Before I begin, be sure to smash that thumbs up to help me promote this video on YouTube, and click on the subscribe if you'd like to see more of these videos. I'm not going to spend time reviewing how last week's scenario played out. If you're interested, you can watch the previous Trade Watch video for these ETF and see how they worked out. I will put the link of this video in the description below and at the end of this video. On this daily chart for the SPY, as you can see, I still have this resistance zone and also a little bit of a support resistance zone here, and a support zone down here from the daily chart, and those are still valid. So these zones will also be carried over on the intraday chart, in which that we will look at next. Now here on the SPY, I have established the upper range zone for the expected move, and also the lower range zone for the expected move. The upper range is anywhere between 395 to 393.81, and the lower range is 376.45 and 374. Now these price zones are based on what the option market is pricing in for a possible price move for the week. If you have any question about these zones or my analysis, post them in the comment section below, or post them on my Twitter channel at smtraderCA, and I will answer them as soon as possible. Now here's a pro tip. Do not trade these trade zones using reversal to the mean approach. In other words, do not try to trade it back into the zone or back into the expected move range if the price has moved beyond the zone. Just because 68% of the time the price will be inside the expected move range doesn't mean it will reverse back into the range 60% of the time. It only means 68% of the time it will trade inside the expected move range. In a future video, I will show you how I use the expected move for my trading, and also give you some guidance on how to determine the expected move upper and lower zone. Now back to our analysis. Now for next week, well, first of all, look at the volume profile. The daily volume profile been one time framing down, and on Friday it reversed back up and started one time framing up, and also we see the value area got shifted up. So I do expect in the early part of next week to see this upside movement to continue, at least for a up until probably up to this virgin point of control near 389. Then this is the level that I want to keep an eye on to see how the price will react at these level, at this virgin point of control. Would it be able to push above it and move up and push through this resistance zone that we identify on the daily chart and come up to the upper range of this high volume area here? Then we will watch for any kind of pullback, and if the pullback could stay above this virgin point of control, then I'll be looking for a possible continuation push to exceed and move beyond this upper boundary of this high volume zone, which will go above the 393.39 and push through to this upper range of the expected move between 395 and 383.81. And also there is a value area high of this composite volume profile near 395.56. And also there's a virgin point of control here from this day here at 396.47. So that's the move that I will be expecting to keep an eye on for the upside scenario. So the key thing is this particular virgin point of control down here at 389.16 or so. Now, If it come up and unable to stay above this virgin point of control and reverse back down, then I'd be looking for the price to come down and come below, dip below this high volume zone, the lower edge at 385.87, and push down to this virgin point of control to 384 area and see how price will react at this level. And if it could not stay above this 384 level here, then I expect it to push through this support zone here from the daily chart that we identify, this support zone, and push down into this high volume zone here and dip below and start working toward this lower range of the expected move down at 376.45 and 374. And also this lower range is in confluence with the composite volume profile point of control near 374.75. Now there are a couple of these virgin point of control up here. One is at 379.35 and the other one at 377.63. So those two virgin point of control could also provide some minor support here. So keep an eye on these two levels as well. So those are the up and down scenario and price level that I will be keeping an eye on for the SPY in the coming week. And on this daily chart for the QQQ, the ETF for the Nasdaq 100, see that I still have this resistance zone here, essentially this gap fill here, and also a little bit of a support zone down here, and a support zone way down here at somewhere around 266 level. And here are the zone for the expected move. For the upper zone is between 302 and 356, and for the lower expected move zone is 283.18 and 281. Now, once again, similarly to the SPY, I'm also looking for a little bit of a continuation move on the upside early part of next week, and basically looking for the price to get above this virgin point of control around 291.22 and see would it be able to push up to this virgin point of control at 295.32 and get up to this upper edge of this high volume zone here. And if it could stay above this upper edge and come down, stay and chop around, and also be able to remain above this virgin point of control at 295.32, then I'd be watching for this thing to push through this resistance zone above the 299.25, essentially this lower edge of the gap, and complete the gap fill and push up to the upper zone of the expected move somewhere in the $300.56 to 302. So those are the upside level and the upside scenario that I will be watching for next week. Now for the downside is if the price come up and unable to stay above this virgin point of control at 295.32 and start pushing back down, then watch this virgin point of control, 5 days point of control at 291. And if it could not stay above this 291, then look for the price to continue to push down and dip below this high volume zone and get below this 288.68 and see would it be able to come up on a back test and be able to get back in it. If it's unable to get back into that zone, then look for a move to continue to push down to this virgin point of control at 286.64 and into this support zone here on the daily chart and come down to this lower range of the expected move between 283 and 281. And once again, also in confluence with this 281 composite profile point of control here. So look for this zone to be in play if it's start moving back below this high volume zone here. So those are the level and the scenario that I will be watching for the QQQ in the coming week. Here's the daily chart of the IWM, the ETF for the Russell 2000. Again, I still have this resistance zone up here, this gap fill, and also a little bit of a resistance zone here near the 175 level, and a support zone down here, 163, 164 area. And the upper range zone for the expected move for the coming week is between 179 and somewhere around 178. and the lower zone for the expected move is 168.25 and 167. Now, once again, similarly to the QQQ and also the SPY, we'll continue to see a little bit more continuation on the upside and looking for this to push up to this a little bit of a resistance area near the 174.60, 174.50. And if it could get above this resistance area, then look for this virgin point of control at 175.80 to get tested and see would it be able to get above it. So we could see a little bit of a pullback back to this resistance turn support zone area at the 175.67 area. So any kind of pullback here on a back test, look for any sort of support to see would it be able to hold up. And if it could hold up above this 175.80, then we expect it to look for the price to push up into this upper range of the expected move and also come up to this virgin point of control somewhere around 178.79. So that is the upside scenario for the IWM. Now for the downside, basically looking for the price to see would it be able to hold this virgin point of control somewhere near the 173 and also hold inside of this support area. If it dips below this support area and underneath this 173, then I will be watching for the price to come back in to this high volume zone here and work its way down to this lower range of the expected move between 168.25 and 167 and toward this virgin point of control somewhere near the 167.48. So those are the price level and the up-down scenario that I will be watching for the IWM in the coming week. Here's Apple. You notice that Apple broke above this resistance zone, and now it's coming up to this resistance zone up here near this 151.5 area. So we'll see would it be able to break above this resistance zone in the coming week. Here's the upper range for the expected move for the coming week on Apple. It is 156 and somewhere around 156 and 155. That's the zone. And also that the lower range is between 145.5 and 143. Now notice that I also have a trend line here. And here is what I'm expecting Apple to possibly do in the coming week is to come up to this resistance zone and chop around before it pushes above and break away from this resistance zone and up toward this virgin point of control near 156 area. And that would also bring it up to this upper range of the expected move to be in play, which is between 156 and 155. Now on the downside, if it come up and unable to break this resistance zone and start coming back into this high volume zone here, then I be watching this virgin point of control at 149.29 to see will the price be able to hold above this point of control. And it is unable to hold above this level, then I'd be watching for the price to continue to move down toward this lower range of the expected move and get into this 145.50, which is also in confluence with this composite volume profile point of control near this 145.43. Then I'd be watching the price to come down and possibly tag this 143 and also get into this support zone here at this little bit of a between 143 and 144. So we'll see would it be able to hold this level, essentially hold this trend line and start bouncing back up to the upper range of this expected move lower range zone here at 145.50 and also this composite volume point of control. So those are the level and the scenario that I'll be watching for Apple for next week. Now Tesla is scheduled to report earnings after the market close on Wednesday. So we're still looking at this potential resistance zone here and the support zone down here, 631 area. So let's go and take a look at the intraday chart. So on this chart, I have identified the upper range of the expected move to be somewhere between 795 and 776. And also the lower range is somewhere in between of 663.80 and 650. So this is the expected move for the earning as well, because the option market is already pricing this move for the earning report on Wednesday after the market close. Now again, I'm expecting a little bit of a continuation on the upside move, just like in the broader market. And we're basically looking for the price to come up to this point of control here, this virgin point of control near 759.20, and also in confluence with this composite volume profile value area high. So I'm looking for the price to come up to this level here near 759 and see would it be able to push above it and stay above it and essentially get into this resistance zone that we identify on the daily chart and see what it push up to this upper range of the expected move between 795 and 776. And that would be the result of possibly a positive earning result. Now, on the downside, if the price is unable to get up and stay above the 759, or it's just basically chopping around here near this 759 area, and the earning report comes out and it turned out to be negative, then we're going to see the price to come down, take out this point of control near the 720, and also this virgin point of control near the 696, and move down to this lower range of this high volume zone here at 679. Then look for it to come down into this lower range of the expected move. And that is what the option market is pricing in on the downside for a negative earning report, and possibly break through the expected move lower range and down to this virgin point of control near 632.75, near this potential support zone here that we identify on the daily chart. So that is for Tesla for the coming week, and for the potential movement based on the earning report coming out after the close on Wednesday. On Monday, before the market open, BofA is going to report earning. And this is the expected move for the earning report being priced in by the option market. The upside is between 34.12 and 34.50. And the downside is somewhere around $30 and $30.40. So it's basically between $34.50 and $30. That's the expected move for BofA. Now, looking at the price action here, as you can see that the price is inside of this high volume zone. And if the price have a positive reaction to the positive earning, then we could see throughout the week that price will likely work itself up. And first is to break above this high volume zone upper edge somewhere around 32.88. Then see would it be able to push through this high volume node here somewhere around 33.36, and then into this low volume zone. And that would also come up to the expected move upper range near the $34 level. So that would be the upside. And if it's a negative report and the stock price react negatively, then we'll see price come down to this lower edge of this high volume zone somewhere around $30.69. And if it break below that, then it'd be working into the expected move lower zone somewhere near the $30.40 to $30, which would be at this lower high volume zone, this little doji hammer area here. So that's the downside scenario for the BofA earning report. And Goldman Sachs is also scheduled to report earning on Monday before the market open. And the expected move for the Goldman Sachs earning report on the upside is $307.25 to $310. So that's the range on the upper range. And the lower range is anywhere between $280.50 to $275. So essentially, we could see Goldman Sachs to move anywhere between $275 to $310 on the expected move for the earnings. Now, looking at the price action here, right now it's sitting right inside of this high volume area. So if it's a positive reaction on the earning report, we'll watch Goldman Sachs work itself up to this upper edge here at $300 level and get into this high volume zone, this high volume node, somewhere around 302.50. And if we can get above that, then we will watch Goldman Sachs move into this upper range at 307.25 and 310 level, which is also in confluence with this little bit of a high volume area here. So that would be the upside reaction for Goldman Sachs earning report. Now on the downside is that it will break this lower edge at 291.77 and work down to this high volume node here at 288.74. And if it's unable to hold this level, then we expect to watch Goldman Sachs to come into this zone and dip below 285.71 and work toward the lower range of the expected move at $280.50, $280.50 to $275 level. So those are the downside price level and downside scenario to keep an eye on for Goldman Sachs. And the first FANG stock to report is Netflix. And Netflix is going to report after the market close on Tuesday. Now, here are the zone or the expected move on the upside and the downside for Netflix earning report. On the upside, the market is pricing in $217 to $230. That's the upside range that it is pricing in. And on the downside, essentially somewhere around $161. Now, looking at Netflix right now, you see Netflix is sitting right in the middle of this high volume zone here. So we expect on a positive reaction to the earning is to see Netflix come up to this 202 level, break above this zone, then move up into the upper range of this expected move range of the upper zone at 217 to 230. Now, there could be a positive surprise that it might get up to this gap level here, somewhere around the $250 area. Now, on a negative reaction, then we see watching Netflix to come down, break below this lower edge of this high volume zone at 173, 174 area, break below 174, and we'll watch it to dip down to this 161 and possibly get down to this 155, 156 area. Okay, so those are the earning play for BofA, Goldman Sachs, and Netflix. So it's going to be a busy week with earnings start, and also the following week with the FOMC and some other FANG stock, such as Apple, Amazon, those hot, large cap tech stock is starting to report. So to this week's price action will likely set the tone for next week. So just keep an eye on these price scenario and price level that we just went to and establish and see how they play out. And be sure to smash that thumbs up to help me promote this video, and let me know how you like these video. You want to see more of it, less of it, or don't care. Post your comment in the comment section below, and if you have any input or insight of what you think the stock might do, then post it and share with the rest of the community. Thank you for watching and stay safe.